All right, good afternoon, everybody. This is Brian Leising, Life Insurance Sales Director at Financial Brokerage. And by my clock, I've got 1 o'clock, so I think we're going to go ahead and get started here. We have a special treat for everybody. You don't have to listen to me give the webinar this afternoon. And we have got Patrick Johnson of SBLI in the house right here at Financial Brokerage in Omaha. And he's going to be discussing 4 reasons to sell whole life. And SBLI's whole life really does cover all the bases: flexibility, integrity, guarantees, and PJ will be speaking about 4 different ways, 4 sales ideas you can utilize that whole life product with your clients. So PJ, we'll turn it over to you right now. Good afternoon, everybody. PJ Johnson here. I hope you can hear me now at SBLI. Sorry for the technical difficulties. We've got about 20 minutes here today to share with you about 4 sales ideas using our new PAR Whole Life product. And you can see a lot of flexibility in this product with the variance in the sales idea. The first one we have here is the Smith family. Jim's 35 years old, making $190,000 a year, as you can see. His wife, Brenda's 35. She's a school teacher, expecting their 2nd child. A 3-year-old and a newborn due, and they decide Brenda's going to take a little time off from work. And they've come to us with an insurance need, and the key factor here is the $300 per month. That's their budget. Most of our whole life sales, you're going to know what the need's going to be. You're going to know their underwriting classification, and what you really don't know is what their cash flow is. So we've got a little math scenario here where they got $300 a month, and we're going to try to satisfy all their needs. Here's some of their goals that Smith came to us with, and we're going to satisfy all of these in this sales idea. We're going to eliminate debt. They want to provide education fund for the kids. They want to supplement their incomes. They want to reduce life insurance premiums after the children are grown. They want to include an option to add coverage later without proven insurability. They want to eliminate premium payment in the event of disability, and provide a death benefit for the kids and protect their insurability down the road. So those are the goals the Smiths had, and so we went shopping. The thing to know about our our whole life policy, I'm going to back up and tell you just a minute about our standalone term. You can buy it in a 10, 15, 20, 25, or 30-year guaranteed term period. It's exactly the same on our term blend. So you can do a 10, 15, 20, 25, or 30-year term rider. It's exactly the same price per thousand as a standalone, but it's actually a little cheaper for the consumer because when you put the term insurance inside the whole life, you got one policy fee. So I told you that because in this example with Jim, because they only had a $300 to spend, we did a 1/3, 2/3 split. Most of you probably heard of a 50-50 blend. This was a 1/3, 2/3. So Jim needed $600,000 of coverage. We put $200,000 in the whole life, $204,000 a month, and the balance, the $400,000, we put in a 30-year level term rider. So in 30 years, that drops off. That's $40 a month, as you can see. He also wanted a waiver of premium. That's $9 a month. We got the children's term rider, which is pretty interesting. You can go anywhere from $10,000 to $25 in increments of $1,000 per rider. It's convertible up to $125,000 at age 25. That monthly premium is the same one-time premium no matter how many children you have, so that's pretty cool. He also, Jim, wanted the ability to buy additional coverage without proven insurability, and that's called the guaranteed purchase option, the GPO. When you do the software, and we're on WinFlex, and the people here at FBI can run your proposals. You can go anywhere from $25,000 up to $100,000 on the GPO. You can build that into the proposal. And this one, we chose $100,000, the most you can get. It's $6.26 monthly premium, which is pretty darn cheap. That gives Jim 5 different times between now and age 50, every 3 years, that he can go back in and buy another $100,000. It'll be a new policy. Obviously, he's going to have the cash flow to pay for it in the separate policy, but he doesn't have to improve insurability. So that's a pretty good option. Brenda, we bought the same amount of coverage as Jim, $600,000, as you can see, and we just bought her the standalone 20-year level term policy, $22 a month, and we came in at $288.32, a few dollars lower than their $300 a month goal. So that's a pretty good sales idea. And then Brian and the folks here at FBI can run that on WinFlex or our standalone software and get those ideas out to you. So we'll go back in, and Jim's death benefit at $600,000 while raising the kids, and reduces to $200,000 when the children are grown. That was one of his goals. Brenda has $600,000 while raising the children. Obviously, she can convert that, as well as if Jim wanted to convert some of his term rider. Whole life policy has guaranteed death benefit, cash value, and premiums that fit their budget. Purchase paid up additional insurance, protected Jim on the GPO rider. We put the waiver premium on there. It becomes totally disabled. $10,000 death benefit for each child up to 25, fully convertible at age 25. And then the 30-year term rider as guaranteed death benefit premium. That's also guaranteed for 30 years for Jim. So he knows what his premiums are going to be. They're not going to go up. And Jim may purchase 5 additional $100,000 policies as stipulated in the guaranteed purchase option without proof of insurability. And again, he's going to get a new policy on any of those. And what's interesting, if he misses one, we don't penalize him. He can go to number 2 or 3. He doesn't have to get all 5 all the way through. So it's going to obviously have a lot to do with his cash flow. All right, that's sales idea number 1. Sales idea number 2 I like a lot. This is a GUL alternative. This is pretty interesting. We got a male age 55, preferred non-tobacco for $1 million, and as you can see, the Prudential GUL $12,941. Guaranteed cash at age 65 is 0. So as you know, a lot of these no-lapse products, they're guaranteed age 121. Pay your premium, you got a death benefit. They're terrific for estate tax planning purposes, where you've got the kids owning the policy or irrevocable life insurance trust owning the policy. And we're trying to throw in another idea for you. If this client has some additional cash out there, we ran our whole life 50-50 blend with a 25-year blend, and it's coming at $16,734. So in order to purchase this, you've got to have the extra $37.94, and that goes back to what we said earlier. Just got to ask the question, if they got the cash flow, great. If they don't, then they buy the GUL. Client's first question to you is, okay, I'm going to give you an extra $37.94. What do I get? Well, look at that second column. Guaranteed cash at 65 is $114,000. That's not a dividend projection, folks. That's a guaranteed cash value right off the proposal. Non-guaranteed cash at 65 is 53 and 142. Non-guaranteed cash at 90, zero. We're at 826. Guaranteed face amount at 90 is $1 million. We're at $500,000. But our non-guaranteed is almost at $1 million. You know, dividends right now an all-time low. Ours is 4.8. So up till age 90, that death benefit's continuing to grow. So in this scenario, it's got $1 million. If you took that $37.94 and you went out to Merrill Lynch and invested that, and you told your broker you needed a guaranteed $114,395 in 10 years, you would need a 19.15 internal rate of return to equal that. So this is a proposal a lot of producers and a lot of clients don't know. This policy is out there right now, and for an extra $3,700, they've got a lot of cash out there. You know, to supplement the IRA down the road, or those types of things when they want to retire. You got a lot of cash in this. It's just another asset vehicle to put money away. That's a great sales idea. The third one is kind of interesting. We're calling this ROP Whole Life. This goes back, you know, 100 years. If I can show you an insurance plan that will be paid up when you retire, from which you can potentially recover all your premiums while you're living, and you still have the full coverage you originally bought, would you be interested? Well, this is pretty cool. Here's a young guy, male, 35. This is our paid up at 65, the guaranteed death benefit, 71.45. He pays it 30 years and he's done. This thing's guaranteed to age 121 on a guaranteed death benefit. Over those 30 years, he's put in $214,350. So right after he retired at 65, we took a couple of interesting distributions. At 66, you can see we took $85,000 out. We waited a few years. We took another distribution of $85,000 out. And then at age 77, we took out $44,000. And that equaled our premiums put into the plan of $214,350. So you can run some of these interesting proposal scenarios on WinFlex. You can do max distributions and things of that nature. We have zero-cost loans after the 10th year, non-direct recognition loans. So product accumulates a lot of cash, and it's a good product to take dollars out down the road, since that's why you bought it and probably are overfunding it. So that works out pretty well. Next sales idea I like a lot. This is a single premium. And we actually have a single premium product that when you put the money in, it's guaranteed to age 121. Just like all of our products. Single pay, 10 pay, 15, 20 pay, pay to 65, and continuous pay. In this situation, the reason why we ran this proposal for this female 70 for $500,000 is there's currently about $9 billion in money market accounts out there right now, kind of sitting on the sidelines. Money markets today are about 0.39. They're actually been going down as the year's gone on, and that's a lot of money on the sidelines, not earning a lot. CD rates are very, very low. I mean, it's just pretty anemic. Earlier in this year, stock brokerage firm in San Francisco, Charles Schwab, announced that they're doing 550,000 trades a day. 550,000 trades a day. That's the most in the company's history. So I put my consumer hat on. That tells me a lot. That tells me that consumers coming back to the market since 08, they're going out there. They've got some discretionary income, some disposable income they want to invest. And they're looking for opportunities. And here's an opportunity that your clients may not know they have an access to. Keep in mind, too, that, you know, husband and wife, people are dying every day, and our exemption now is at $5 million. So there's a lot of money going into V-Trust planning and irrevocable planning. So this happens to be a female 70. We ran her select non-tobacco. That's our third best rating, so we didn't get too crazy in the death benefit. Immediately, her death benefit is $764,000, and that's guaranteed all the way to age 121. And as you can see in this thing, on the 10-year, internal rate of return, you got 6.51, and in the 20th year, you got 4.38. So a lot of people out there have either lost money in the market or something that happens where they're trying to get more money to the kids. And there's a lot of ways you can own this. The female can own this and name the beneficiaries. It could be in a B trust. You could have the kids own this thing. You can have a life insurance trust own it. Keep in mind it is a MEC. It's a single pay. So any distributions coming out of this is going to be ordinary income, similar to an annuity. So our recommendation is just let this thing go. As you can see, the death benefits growing on a non-guaranteed basis as well. In the 20th year, you're at almost at $1.2 million. The client really needs some cash. I would suggest maybe don't give us the $500,000. Buy it an immediate annuity, buy a muni bond or something along those lines. But this is really a wealth transfer sale. Here's our product suite. All these are guaranteed to age 121. As I mentioned, you've seen a number of these, but we got a single pay, 10 pay, 15 pay. I don't know anybody that's got a 15 pay, a 20 pay. We're getting a lot of calls paid up at 65, and obviously we got the continuous pay. We've got 8 riders, illustrated death benefit rider, which is free, and then all the other riders we try to show you in the examples today: a child children rider, guaranteed purchase option. 2 that we didn't talk about, number 4 and 5. We do have a single pay paid up additions rider. That's kind of like a 1035. You got money coming from another company. You want to come over to a guaranteed product via 1035. We can take money. Number 5, flex pay. If you got somebody that's getting an annual bonus, you can put up to 1 times the annual premium on a flex pay. We showed Jim had the waiver premium. We don't get a lot of calls for AD&D. And then, of course, the level term rider is the one that we're seeing the most on. And to recap that, we got a 10, 15, 20, 25, and a 30-year term rider, all at the same price as our standalone product. So that's our 4 sales ideas today for our whole life. I appreciate you folks listening in. Appreciate all your business you're doing with us. We love the folks here at Financial Benefit Brokerage. And I'll hand this back over to Brian, or we have questions and answers. I'll try to unmute you guys here and see if we have any questions. Give me 1 second.